Hey everybody, this is Richard. I'm going to be doing the week 2 and week 3 July 2021 performance review. Now before I do that, I'll do the disclaimer, just our standard disclaimer that we do every time. And then after that, we'll just jump right into the performance. I'll grade the last 2 weeks, and then we'll look at some charts and try to look at some of the highlights from the last couple of weeks. Okay, so as you know, I'm not a commodity trading advisor. I'm what's called a third-party trading system developer. So what that means is we allow the algorithms to be traded under a letter of direction, but we don't directly control your accounts. Just keep in mind that trading futures does involve substantial risk of loss. It's not appropriate for all investors. And of course, past performance is not indicative of future performance. Okay, so the reason why I gave us an A+ for this week is, as you are aware, those of you that are trading the algorithms, we just had a spectacular week. In fact, the last 2 weeks were really good, but the majority of the gains came on this last week. So I'm giving the algos an A+, the Phoenix, and I believe it's the first time I've given it an A+. So, you know, I don't do this all the time, but in this case, it's just undeniable that every single one of the 3 algorithms that's traded just hit it out of the park. And we're going to look at each one to kind of see why that was. But the grade was an A+. The profit loss, believe it or not, was up 8,353 per unit traded in the last 2 weeks. So what that means is that on a 20K account, that's about a 41% gain in the 2 weeks. So it really was a spectacular period for us for a number of reasons, and I'm going to look at those now. So the very first reason is the 10-year note. Notice how in this picture here, and we'll look at the chart a little bit closer, but we got out of our trade that we entered on the 14th of June. So on the 19th, which was Monday, we got out, and then we jumped back in on the 20th, which was Tuesday. Now we're down a little bit since then, but I'm really not docking that against the algo because the market has been rallying. And so, as you know, this is sort of our hedge. And if it trades lower, as long as, you know, the S&P is going higher, then it's kind of okay. You know, that's part of the system. So it's not a surprise. Therefore, and it's not an underperformance, therefore it's consistent with an A as well. Now the other algo that really did amazing was the day trade. So the day trade, the second week of July, it didn't have any trades, which is why I don't really show any trades here. But this last week, it had 3 winning trades, and I know this chart doesn't really show the magnitude of these gains, but they really were pretty huge, especially this one over here on Tuesday that for the most part captured this entire move higher that we saw on Tuesday. So clearly the day trade just outperformed in a massive way. It had 2 really big trades. It had another winner today, and then even on Wednesday it had an up day. You know, there was a great day actually, but because the day before was just so much bigger, it almost didn't feel like a big day, but it really was. So we had 3 really big winners, and that just sort of added to the gains. So that covers the first 2. The 10-year hit its target, and then jumped back in. We had 3 winning day trades, all 3 with really big gains. But I think the real star of this of the last 2 weeks is the momentum algorithm, this S&P ES algo. Now the reason why that this algo is really the star is because of a couple reasons. One, notice on the second week of July, that's kind of right in through here, you see that we had a losing trade and then a winning trade, then a losing trade and then a winning trade. Well, those trades actually sort of cancel themselves out, and I believe that in this period, if you add up all 4 of those trades together, I believe it was positive even though the S&P had gone lower. So it actually got an A in that week. I mean, it really outperformed because the S&P was going lower, and we were kind of in and out to where we really didn't lose a lot. In fact, like I said, I think we made a little bit because these gains on these pops here were a little bit bigger. But the real reason why this algorithm shines so well is notice that we did not buy back in on Friday, and that was a really good thing, because if we would have bought in on Friday, then we would have captured this gap down. We would have got hit pretty hard on the gap down. Now the reality is we would have got stopped out at about a 50-point overnight stop, but it still would have been, you know, a pretty rough start to the week. The fact that we avoided that was huge. And at that point, I know my customers, the majority of them were really happy just because they knew that we were on the sideline, and that the algo in fact was doing what it was designed to do, which was minimize risk by not getting into trades on Friday. It tries to avoid those, and so that paid off. But then the second real big positive was that it actually bought on Monday. And if you were watching this and you were trading it with us, I guarantee you probably felt a knot in your stomach when you saw it buy. I know I did. I mean, it felt incredibly uncomfortable because when you have a big down day, everyone's worried about another gap lower, and it takes a bit of guts to be able to do this buy. And that's where algo trading is so helpful, is because it will do the trade as long as we just let it run. And so we let it run, it did the buy, and fortunately right after the buy, it had a pretty big pop going into that last kind of 5 minutes of equities trading plus the extra 45 minutes that futures trade. And so it was up, which gave us a little bit of a buffer. But then on Tuesday, it kind of opened about flat, and then it just took off. And that corresponds to this day here. But the reason why it was so huge for us was we actually hit a 70-point target on the S&P algo. And so that trade alone was about $3,500. But what made this day so big and this up 41% so huge, or the up 8K, was really because we hit the momentum S&P, but then we also hit the day trade. And so we almost doubled up on this massive day, which is why our gains were just so huge. So that really sums up the last week. I mean, we hit that trade, and the rule that we have is that when we have an up kind of 30% kind of day like we did, then we almost take a pause on this algo and just let it develop. So that's what we did, and as you can see, it worked out incredibly well in our favor. We had a huge gain on the up move on Tuesday, and then we were still in the trades on Wednesday. On this day here in the middle, we were actually in, but that's because of the day trade over here. And then today on this pop that actually kind of had the S&P break out to new highs again, we caught a win on the day trade. And so it just was an incredible week for us, and I know all my customers are incredibly happy. It's the kind of thing that we know that there's always the chance that we can have these kind of weeks where everything just lines up in our favor. And it's true that there are times when the opposite happens, and those are painful when they do. But the flip side of that, though, is that it also can happen in our direction. And in this case, it really, everything just sort of worked almost flawlessly for the algos. And so we get an A+, but and I think that probably is all that I wanted to show. So thanks again for watching, and have a great day.